Oh my God, does all this real estate market information coming at you leave you confused and bewildered about what it means and how it affects you? Oh my God, I've got a story to tell you about all that. Stay tuned because I'm going to break down the data and show you how it affects you as a buyer or seller. Okay? Hi there, I'm back. I'm Burchard, the Desert Bowtie Realtor here in the greater Palm Springs area. I record and post content here about the local market and the desert lifestyle because I love what I do and I believe real estate should be fun and easy. Oh my God. So when I was getting into the real estate market here, there was all this data flying at me. People asking me all the time, what's going on with the market? How is the market doing? How is this particular neighborhood or this particular city? And I didn't always have an answer because I had to search the MLS and aggregate the data and come up with it. That's a lot of work in itself. That's supposed to be our job, I agree. However, I get this monthly Market Watch report that I share with you in my newsletter and on my website. But to you, probably this is like reading a foreign language. So I had to learn not only how to read this, but how it applied to buyers and sellers. And that's what I want to share with you today. So let's get to it. Median prices. For the Valley, homes closed at $640,000, which is up 3.7% over last year, but 9.9% below the peak of $710,000. The attached, or condos, is currently at $440,000, which is up 3.5% over last year, but down 10.4% from its peak. Those numbers are valley-wide. You can find them on the chart that I send out every month where there's a breakdown for each of the cities. I call that my market at a glance. This detailed information is important because it gives buyers and sellers an idea of where prices are and which direction prices are going in any particular city. The percent change gives an idea of how much prices are moving, and it also points out any trends. This is a rough idea, guys. So if you need more detailed information about a neighborhood or a subdivision, that's information that's so easy for me to get and provide to you. I make a point of staying on top of this information every single month. It's easy for me to do because I'm a big old nerd and I love data. Months of supply, or also known as the attrition rate. Currently for the Valley, we have 2.7 months of inventory. What this means is if no new homes are added for sale, then we only have 2.7 months worth of inventory to sell at the current sales tempo, or the sales rate. How this affects buyers and sellers is it gives us an idea of how quick homes are selling. The higher the demand, the lower these numbers will be, depending on inventory. I'll get to inventory later. Days on market. This means the average time on market for any particular home valley-wide. This number may be higher or lower depending on the particular city or subdivision, and they're all broken down in the full report. Currently, our average days on market is 37 days. That's up 37% over a year ago, or 10 days. It's creeping back up to our norm of 50 to 60 days. We'll probably see that towards the middle of next year. This year. Ha! How this affects sellers is it gives you an idea how long it may take to sell your home. Each city is broken down in the full report. For buyers, it gives you an idea of how long homes may be on the market. So if a home has been sitting on the market longer than this, it may mean that the seller is willing to negotiate. Inventory. I told you we'd be back to that. Inventory is the number of actual properties that are available for sale in the current month. Currently, our inventory stands at 1,911 properties, which is down from last month, but triple, or 214%, what we had this time last year. This number means absolutely nothing without observing trends over time. The 214% figure is a measure of the increase or decrease over the previous year. I think I already said that. Observing this over time, you can see how this inventory number has been decreasing steadily since 2017. This shows an increase in demand and resulting market activity. You can see before 2020 the seasonal ups and downs that were normal in our market. Notice the dramatic departure from the seasonal up and down in early 2020. That's when the pandemic happened, and you can see the result on our inventory due to the extraordinarily high demand. Even before the pandemic, we were seeing an increase in demand for desert properties. All the pandemic did was escalate the demand, and as you can see, very quickly eroded our inventory to almost nothing. January of last year, we only had about 607 properties for sale. Wow, that's low. Now we're seeing just above 1,900, which means that we're seeing some normalcy return to our market. Next, we have sales volume, or average unit sales. This is the actual unit sale activity that happens from month to month. For the greater Palm Springs region, this is broken down into two graphs, a 3-month average and a 12-month average. Why do we do this? Because of our seasonality, which affects our real estate activity here. For the 3-month average, we currently have a combined total of 444 homes sold. That's 38% below our pre-pandemic average. Notice how the graph jumps up and down as it follows our seasonal pattern. Before COVID, our 3-month average bounced around the 700 range. During the COVID rush, it shot up to over 1,000 units per month and got as high as 1,300 units. Now we are at 444, which is well below our pre-pandemic sale numbers. The main reason this is down is slower demand due to inflation and the interest rates. There is some seasonality to factor in as well. The 12-month moving average removes seasonality and gives you an idea of how the homes are selling from year to year. You will notice in this graph there are no seasonal ups and downs. Again, notice on the graph how it shot up during COVID and now is slowly getting back down to what we would consider our normal activity. You can see the relative stability in the 3 years prior to COVID on this graph and how it is slowly returning to what it was previously. Looking at the 12-month average, we have returned to our normal sales activity, but because of the slowdown in the market and our seasonality, it is predicted to decline a bit more. How this affects buyers and sellers is it shows how many homes are selling in the desert. Higher sales and lower inventory will push prices higher. Lower demand and more inventory, like we have now, will cause prices to soften. Selling over list price. This statistic is important. This statistic gives us an idea of how many homes are selling above list price. This graph clearly shows demand. That's why it's important. But more importantly, the level of competition for properties. You can see on this graph that last year, more than 43% of homes are selling above list price. During this period, we saw multiple offers on homes that were being sold. Homes could not be added to the market fast enough to replace the sold inventory. This created a significant shortage of supply and jacked prices up. So with high demand and low inventory, buyers were bidding over list price in order to compete or win in a bidding war. So for sellers, this is a great situation. Homes sell faster and will most likely sell for more than the list price. A seller's market. For buyers, it shows how much competition you will face to purchase a property. If you have a good realtor, they will know how to structure the offer to make the buyer look attractive. The highest price in cash do not always win. Just saying. Ta-da! Now, hopefully you have a better understanding of how this information affects you as a buyer or a seller. Now you can make more informed decisions with confidence. For me, I created that market at a glance because all the data is in one cool little sheet that I can carry around or put on my cell phone. It's great to have those numbers at my fingertips, so if somebody asks, I got the information. And because I put that information together, I have to go through the information to understand it. So, my summary is that the numbers show a slow return to pre-COVID activity. Our inventory is still down by about 1,000 to 1,200 units from the pre-pandemic levels. However, other figures are starting to look normal. As I said, the low unit sales are a return to pre-pandemic seasonal patterns coupled with the high interest rates and inflation. The repercussions of the higher interest rates is that it has slowed down our market activity significantly. We are still not forecasting a crash or a major correction to prices in the desert. We will most likely see a dip in prices, but not a crash like we saw back in 2010. I'd love to speak with you one-on-one if you have any questions about this report. Just click the contact link in the description. I promise there's no cost or obligation. Now, watch The Birth of the Bowtie Realtor and find out how I got into this crazy business. This statistic gives it. However, other and how it is slowing. God, why can't I say that?